The US Fed meets tonight. Will they cut interest rates? Australia's CPI is due out as well. Will that mean the Reserve Bank does a Melbourne Cup rate cut next week? And Woolworths is killing Coles. I'm Paul Rickard and I'm mad about money. Well, I'm especially mad this morning because my colleague Peter Switzer is AWOL again, so you've just got me for the next couple of minutes. Okay, let's move on to the United States, where the biggest meeting in the world this week, of course, is the US Fed. It concludes its two-day meeting tonight with an expectation that the Fed will have a further cut in interest rates, apparently a 94% chance that they'll cut interest rates by 0.25%. However, that's not really what the market is watching. It's more about what the Fed says about going forward. Will the Fed governor be a little more upbeat in terms of economic growth in the US, perhaps not as big an impact of the so-called trade war? If he's upbeat and we get a suggestion that interest rates, that's the end of interest rates, that will be a big boon for the US stock market. If, on the other hand, he's a bit more downbeat and still worried about the impact of the trade war, that could cause a little bit of a sell-off. So a big meeting in the United States tonight. Market will be playing this one carefully, but with the S&P 500 just closing short of its record high again last night, it clearly wants to buy the market. So perhaps the risk in all this is a spike in the US stock market. That's the US market. Locally, we were a bit mixed yesterday, but I guess we'll get a bit more impetus this morning. Big event in our market day is the Australian CPI. Expectations are an increase of 0.5% for the quarter and a 1.7% annualised rate. That's about the same as the rate the previous quarter. The big issue, though, is what's the so-called trim mean. That's the rate that the RBA looks at, expectations of 0.4 and 1.6 for the year. That doesn't do a lot. Let's like to see a slightly higher inflation, because to take away any chance that the Reserve Bank may be thinking about cutting interest rates on Melbourne Cup Day. We don't need another cut. Another cut is not going to do anything for our market or stimulate buyers or stimulate borrowers. So I'd like to see inflation a little bit on the higher side, so that any excuse for a cut is taken off the table. That'll be out at 11:30 a.m. Now, moving on to the market as the bell goes, because I'm ahead of time, Woolworths has come out with some absolutely stunning sales results this morning. First quarter sales growth of 7.8% for Australian food and 6.6% on a comparable stores basis. Now, they have the benefit of the Lion King Aussies program. I don't really understand what it is, but I gather people go in and get Aussies. But it does put into light a little bit the result that Coles had yesterday. Coles store sales were up 1.6% and comparable store sales were just by a miserable 0.1%. Now, the market got very excited by the Coles result because that came off a promotion for the same time last year. They were actually expecting sales to be down, but it does show you just how much Woolworths is doing better than Coles. Take these other couple of data points. On the liquor business, where there's been no benefit of any promotions, Woolworths had a sales increase of 4.9% for the first quarter compared to Coles 3.5%, and on a comparable stores sales basis 3.2 versus 0.7%. The other thing about the Woolworths business is Big W actually had a sales increase. So Big W looks like it's getting back onto track. Now, who is the loser in this? Unquestionably the biggest loser. I don't think it's Aldi. The biggest loser has got to be IGA, so through the Metcash business. So if anything, we should see a good spike in Woolworths shares today, following on from Coles yesterday. Personally, I think they're both getting a bit expensive, but I've said that before, but the market will be pretty happy with the sales results. One other thing before I go, just going to be a little bit wary about yields at the moment, because yields are on the way down, mainly because of two things. The market is going up, and some of our major companies are actually cutting yields. We've seen most of the major banks cut yields. Expect Westpac also to cut its dividend next week. So whereas you might be getting used to have thought that a dividend yield of 4 to 5% look good, get used to a big figure 3. I'll be writing about that in tomorrow's Switzer Daily. I'm Paul Rickard and I'm mad about money.